Hello and welcome to the Wendell Effect. My name is Brandon Wendell, and I'm going to be your guide as we take a look at the different sectors in the U.S. equity markets. So we're going to kick this off, but just need to remind you first that we are not broker-dealers or investment advisors. We're going to take a look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities, giving any personalized recommendations here. Past performance, no indication of future results. There's always risk involved in the markets. That's always a situation. All we can do is try to minimize the risk. We cannot eliminate it. And we are not subject to trading restrictions, so we can have a position in a security or initiate one at any time. So if you got any questions or requests, anything you'd like me to talk about, please email me at brandonwendell.cmt@gmail.com. You can also hit me up on Twitter. I tweet pretty much every day. @TraderBW is my handle there. And please, if you could, help me out by hitting like and subscribe, and also get the alert notifications. That way you can stay in touch and be notified when new videos come out on a regular basis. So we're going to kick this off taking a look at the week of April 9th for sector performance. And, looking at the last 6 months, you can see that we've been led by communication services and technology. Those have been the two hot sectors when you take a look at April 6th going back to October 6th for 6 months. Now, looking at the sector rotation for the model here, basically, when you have communication services and technology leading, that's near the beginning of a bull market. So this, the way the markets are set up right now is suggesting that there's a lot more bullishness to come because you're seeing that the money is being flowed into those two beginning of the bull, if you will. But the weird thing is the other sectors that are leading are the defensive sectors, which is the beginning of the bear. So we got two different camps kind of fighting it out right now, where some money is thinking, oh, we're going to go up, so we better get in on the ground floor, while other money is saying we're getting ready to drop and we better play it safe. So obviously time will tell to see who's winning. You take a look at the past month, and from April 6th going back 1 month, again, same picture. It's got leadership in those beginning bullish sectors, as well as the safety valve, which is, again, when the market's getting ready to drop or the U.S. goes in recession, you see money pouring into those sectors: staples, healthcare, and utilities. So just going back the previous month, by the way, to see the change, it actually is suggesting a little more of the safe haven search. Because you look, and technology was still pretty strong. That, again, was going back in March for 1 month. So you can see that this was the leader, up 6%, and, well, not the leader, sorry, it's number 2. And it's actually dropped a little bit. So even though this looks very, very strong, oh no, I take it back, that's gone up. It doubled. Yeah, this was the month before. So you did see a big gain in that bullish sector. But again, going back, look at the difference here. These are the safe haven securities, and they jumped dramatically. They made the biggest move. So that to me is suggesting that people are actually looking at the safe havens and are worried about a market collapse. So looking at the individual markets, taking a look at XLY, we bounced off a daily demand from a while ago, bounced off supply. Now we're just kind of stuck in the middle. I don't see a lot coming out of consumer discretionary going forward for a little while. It looks like it could be a bit choppy here. Slightly bullish, but we may get stalled out once again right around 152. Looking at the communication sector, this also is very choppy. We made highs, we make lows, we make highs again. It can't seem to break through this area, which is really now resistance. It's not supply. It's been tested too many times. There's not leftover orders, but it is causing people to panic sell when it hits that $60 level. And it looks like it could happen again. We're not getting the same momentum we had before, so there's no reason why we don't pull back and maybe even bounce off of 56 before going higher. Looking at technology, you can see that we are trying to push up, but we stalled out at supply. And we're just getting a small pullback before we go higher. And my next target is 156 and then eventually 164. Technology still looks strong. It's been a leading sector. It looks like it's going to continue to push higher. Looking at materials, definitely not as strong. You can see we made a high right now on a correction. We pulled back right into supply and are projecting to go lower. We didn't have enough momentum to break through that supply. So that's suggesting that we are going to go down and just see some selling pressure this week. If you're looking for shorts, you might want to go in that sector, the materials. XLE, energy. Well, we had the big gap up with all the energy markets. You saw the energy futures if you watched my other video, and we had the huge gap up this week. Well, unfortunately, it only gapped into supply, and now the selling pressure is taking back over and continuing to push down. We did break the downtrend, but we're not in an uptrend either. We're just pretty much sideways and probably going to drift lower as the buying pressure wears off. Looking at consumer staples, we still have room to go up. And as we come into, it's kind of a weak supply zone, but it did work in the past. We have lots of momentum to potentially break through. I think we're just going to do a little pause here before we actually do push and make new highs. Again, this is a flight to safety. Consumer staples are typically bought when people expect a recession in the economy or weakness in the markets. So that's what we're seeing going on here. And it does look like this sector will be bullish after a small pause this week. The healthcare sector also looks a little bit strong. You can see the huge amount of momentum to the upside here as we bounce off demand. And there's nothing to hold us down until we get to 140. So overall, that big move up that we had last week could, after a small pause, continue. So I wouldn't be surprised to see it pull back to about 131 right in this area before we pop back up again by the end of the week. And looking at utilities, we had a pretty good move. First off, our weekly demand that changed our trend, but now off daily. And we're getting close to the supply at 71.11. Lots of momentum though. We'll bounce downward and retrace first, but that's an opportunity to buy before we continue up to 73 or even up to 76. So looking for buys on the pullbacks, pick your battles and look for demand, perhaps on the 4-hour time frame or even right here at this rally-based rally around 67.50. Next, we have the financials, which are definitely falling out of favor. Even before all the big news came out with SVB and the other banks, we saw that prices were diverging and falling off in momentum. We made a high without going above 60. That's very bearish. And of course, price fell through and the news came out. But there's plenty of warning signs before that. Anyway, all we're doing now is simply correcting up after a big move down. So we may stall out at one of these Fibonacci retracements before we continue to go lower. But this sector definitely looks weak and has plenty of room to go to the downside. And finally, real estate is trying to hold up, but we had too much bearish momentum for that demand to hold. We went almost 3/4 of the way. It's a little shy of that. Definitely went beyond halfway into the demand. Did a small retracement, but the momentum is not strong, as you can see. We can't get above 60. So this may be the high that we put in, and prices are poised to continue to push down. There is supply right above that area. And you got this drop-based drop. So if we do pull back, we're not going to get through that before moving lower. So look for the selling opportunities. Look for shorts in real estate. Anyway, if you got any questions on anything I just talked about, or you want to give me any suggestions or recommendations that you'd like to see for the next video, hit me up, brandonwendell.cmt@gmail.com. Please follow me on Twitter. I stay active on that and interact with people all the time. And of course, if you could hit like and subscribe, as well as hit for the alerts, and that way you can stay in touch with me on these videos and get notified when new ones come out on a regular basis. I want to thank you for your time, and until next time, trade safe, trade well, and take care, everyone.